Assalamualaikum warahmatullahi wabarakatuh. My name is Atika binti Azman. Next, I will present my part, which is company background and current issue plus development.
Firstly, we're gonna talk about Sapura. Sapura Energy Berhad, formerly known as Sapura Kencana Petroleum Berhad, is a Malaysian integrated oil and gas services company based in Seri Kembangan, Selangor. Sapura Energy trades in over 20 countries such as China, Australia, United States of America and those in Western Africa and the Middle East, employing approximately 30,000 people. Sapura Energy's operation cover exploration, development, production, rejuvenation, decommissioning and abandonment. The company was formed via a merge between Sapura Kris and Kencana in May 2012 and trades on the main market of Bursa Securities Berhad. The company was renamed as Sapura Energy Berhad on 24 March 2017. Sapura Energy is an upstream player in the oil and gas industry, providing an entire value chain of exploration, development, production, rejuvenation and decommissioning service. The Malaysian company was born out of a merge between Sapura Kris Petroleum and Kencana Petroleum in 2011. Next is Sapura Core Business. Sapura Energy Berhad is an investment holding company which engage in the provision of oil and gas services and solutions. The firms operate through the following segment. First one is engineering and construction. Second, operation and maintenance. Third, drilling, exploration and production and corporate. The engineering and construction segment provide end-to-end turnkey engineering, procurement, construction, installation and commissioning solution for the energy industry. The operation and maintenance segment offer a service suite of onshore plant maintenance and offshore support. The drilling segment operates a fleet of tender-assist drilling rigs. The exploration and production segment provide exploration, development and production solution. Its service include offshore construction and installation, brownfield rejuvenation, subsea service, offshore support vessel, tender-assist rigs and semi-tender rigs. The company was founded on June 30, 2011 and is headquarters in Kuala Lumpur, Malaysia. Sapura Ownership. Sapura Energy Berhad is a public limited liability company. As of 2017, the number of shareholders totals to 37,217, with Sapura Technologies Sdn Berhad retaining 30.37% and the Citigroup's nominee, which is Tempatan Sdn Berhad Employees Provident Fund Board holding 10.06% of the shares. The chairman of the board of directors is Hamzah Bakar, while the company's president and group chief executive officer is Syahrul Shamsuddin, who also serve on the board of directors and the president and group chief executive officer of Sapura Group. Next, we move to Sunway background. Sunway Berhad or Sunway Group is a Malaysian conglomerate company. It was formed following a merge between Sunway City Berhad, Sun City, and Sunway Holding Berhad on 23 August 2011. Sunway Holding Incorporated Berhad commenced operation in 1986, mainly to develop the Bandar Sunway Township in Petaling Jaya. It was listed on Bursa Malaysia Securities Berhad on 16 February 1984. Sunway City Berhad, on the other hand, was incorporated in 1982 and engaged in the investment and development of residential, commercial, retail, leisure and healthcare properties primarily in Asia and Australia. Following the success of the Sunway City Township, the group diversified into property investment, leisure and entertainment, hospitality and healthcare. Today, Sunway maintains property development and construction as its two core business and key contributor to profitability. Sunway notable subsidiaries. Most notable subsidiaries located close to the headquarters in Bandar Sunway. These include two main hotels. First, Sunway Resort Hotel and Spa. Second, the Pyramid Tower Hotel. Other tourism-related facilities include the Sunway Pyramid Shopping Mall, Sunway Lagoon Theme Park, various beverage entertainment outlets and other leisure facilities. Sunway Group is the parent company of Sunway Education Group. The group comprises different educational institutions, which are Monash University Malaysia, Sunway University, Sunway Le Cordon Bleu Institute of Culinary Arts, Sunway College, Sunway International School, and Sunway International School Sunway Iskandar. Sunway Group is the part owner of the campus. Sunway Group is also the parent company of Sunway Totoraba, an industrial plastic and rubber supplier based in Dandenong, Australia. The next slide is gonna move to Sapura current issue and development. The first one is on the edge market for April 2022. What can we conclude from the article above is Sapura Energy Berhad record quarterly loss of 6.61 billion, shows that a lot needs to be done to nurse the upstream oil and gas contractor back to financial health. The massive loss in the quarter ended January 13, 2022 for quarter final year 2022, which include an operating loss of almost 1 billion, brought about by legacy contract issue, come despite the elevated oil prices which averaged at $81 per barrel in the 3 months ended January. Together with impairment on asset of 5.39 billion ringgit, the latest result will likely see the cash-strapped company fall into the practice not 70 category after its shareholder equity fell below the minimum threshold of 25% of its paid-up share capital. Analysts have turned bearish on the counter with 9 sell calls and 1 buy recommendation and an average target price of 3.5 cents. The different views lie in their expectation of the speed of a turnover, with many citing liquidity issue as a hindrance to future job wins. On the other hand, BIMB Research, which has a contrarian view, has a target price of 50 cents on the counter. It said in a March 21 note that it sees the company disintegrating its drilling business and strengthening its engineering and construction business as the latest form the backbone of the local oil and gas ecosystem. Another valuable asset is Sapura Energy 50% stake in exploration and production E&P outfit Sapura or MV, which is Jiran gas field of Sarawak that is expected to produce 500 million standard cu feet per day of gas upon commissioning in 2024. Sapura Energy substantial shareholders comprise Pemodolan Nasional Berhad with 40% equity interest, followed by its former chieftain Tan Sri Shahriar Shamsuddin and his brother Datuk Syahriman Shamsuddin, a non-independent, non-executive director of the company, who collectively have a 12.82% stake. Sapura Energy full year final year 2022 loss of almost 8.9 billion ringgit is over 95% more than its previous record loss of 4.56 billion in final year 2020. Meanwhile, its latest full year revenue of 4.12 billion ringgit was the weakest since the company was formed following a merge between Sapura Crest Petroleum Berhad and Kencana Petroleum Berhad in May 2020. Another article is from The Star, 1 June 2022, which is Sapura Energy expect improved operating environment. Capitalizing on this opportunity will require Sapura Energy to retain laser focus on the effective financial and operational restructuring of the company, it said in its annual report 2022. Sapura Energy is optimistic about the prospect of reaching an agreement that recognizes the claims of its lender while ensuring the continued financial viability of the company, and it would also continue to negotiate with its trade creditor under the framework of scheme of arrangement to reach a mutually acceptable agreement on outstanding payment. Sapura Energy said that the pandemic continued to have a major impact on its financial performance in final year 2022. It added that almost all of the 2.2 billion ringgit operating loss resulted from legacy contract that the group signed before the previous financial year, which does not include COVID-19 provision. The group also noted that Sapura Energy exposure to pre-pandemic contract is expected to be reduced in final year 2022-23, as its legacy contract account for about half of its revenue composition in the first quarter of final year 2020. Next, we're gonna talk about Sunway current issue or development. The news that I found is the Asian post 28 January 2022. The title is Sunway Building Back Better the Right Way. Sunway has a diverse portfolio covering real estate, property investment, and real estate investment trusts, healthcare, education, hospitality, leisure, and others. Even before its introduction by the Malaysian Stock Exchange, Bursa Malaysia in 2014, ESG criteria have already underpinned of Sunway business philosophy. In a way, it has been embedded in the corporate DNA. Tan Sri Dr. Jeffrey Chia, founder and chairman of Sunway Group, once said, "In all that we do, we must improve the quality of life and society, contributing towards making our community and nation a better place for future generations." Despite the profitability of certain industries, he was always choosing the path to healthy nation building, avoiding industries such as gambling, as well as advocating a smoke-free society which promote Goal 3 of the SDG. Sunway business model and culture is centered around an enduring purpose. To advance the way people live sustainability, the group embedded the 70 SDGs and ESG consideration into their pursuit of this goal. It is evident that in recent years, Sunway has made a strong commitment to advance the SDGs through its ESG compliance framework, CSR initiative, and also acclaimed research center. The very foundation of Sunway are based on the concept of sustainable development, beginning with the transformation of its flagship Sunway City, Kuala Lumpur, from a relative wasteland into a smart, sustainable city today. Along with Sunway's commitment to advancing the sustainable development agenda, the group has committed to achieving net zero emission by 2050. Aiming to gradually cut its carbon footprint each year, Sunway is ready to accelerate and intensify climate change action by implementing an internal carbon pricing to encourage carbon reduction initiative across its 30 business divisions. The next news is from Business Today, 25 February 2022. Sunway berhad fourth quarter revenue for 2021 increased 30.5% year-on-year to 1.24 billion ringgit, predominantly due to stronger revenue recorded from property investment and other segments, which managed to offset the lower revenue from other business segments. It should be noted that development profit on two of the group ongoing property development projects in Singapore will only be recognized upon completion and handover of the project. As at end of the current quarter, the accumulated progressive profits of this project amounted to RM 51.7 million, of which 11.7 million ringgit was recorded in the current quarter was not recognized. The group declared a second interim single-tier cash dividend of 1.50 cents per ordinary share for the financial year ended 13 December 2021 at a preferential dividend of 5.25% per annum.
Assalamualaikum and hi, my name is Nur Bashirah binti Hassan, and for my part, I will explain about ratio analysis. Ratio analysis can mark how a company is performing over time while comparing a company to another within the same sector or industry. For my part, I will explain the comparison of ratio analysis between two companies which are Sapura Energy Berhad and Sunway Berhad. For the first one, which is liquidity ratio. Liquidity ratio consists of current ratio and quick ratio. Current ratio is used to measure company's ability to pay off its short-term debt obligation with its current asset. Current ratio is calculated as current assets divided by current liabilities. While for quick ratio, it is used to measure ability of a firm to cover all its outstanding liabilities when they come due with only that can be converted quickly to cash. To calculate quick ratio, current asset must minus inventory and then divided by current liabilities. So as you can see here, we have table and also graph bar of liquidity ratio of both Sunway and Sapura Company Berhad. For current ratio, it's shown that Sunway Berhad has a high ability to pay off its short-term liabilities rather than Sapura Energy Berhad. While the quick ratio of both Sunway Berhad and Sapura Energy Berhad are less than ideal ratio of 1:1. Therefore, this shows that both of the firm may face difficulty in payment of their immediate debt obligations. Next, we move to leverage or solvency ratio. A leverage ratio is any one of several financial measurements that look at how much capital comes in the form of debt, which is loan, or assesses the ability of a company to make its financial obligations. In other words, leverage ratio actually tells investor how much debt that the company is used to make company run and still alive. In this leverage ratio, it includes three ratios, which are debt ratio, debt to equity ratio, and equity ratio. Debt ratio is used to measure the firm's ability to pay off its liability with its asset. In other words, this shows how many assets that firm must sell in order to pay off all its liabilities. Next, debt to equity ratio is used to evaluate a company's financial leverage and is calculated by dividing a company to total liabilities by its shareholders' equity. The equity ratio is a financial metric that measures the amount of leverage used by a company. It uses investments in assets and the amount of equity to determine how well a company manages its debt and funds in asset requirements. A higher equity ratios mean minimum debt and low risk for a company, while lower equity ratio means company owns higher debt and high risk. So as you can see here, we have two graphs for leverage ratio of Sapura Energy Berhad and Sunway Berhad. Overall, for debt ratio, Sunway Berhad has lower debt ratio rather than Sapura Energy Berhad. Thus, the lower ratio, the safer the company as it has less financial risk. Second is debt equity ratio. Sunway Berhad has a good debt to equity ratio rather than Sapura Energy Berhad. This is due to lower ratio, and it's shown that Sunway Berhad is able to generate sufficient cash to satisfy its debt obligation. And the last one is equity ratio. Sunway Berhad is more stable than Sapura Energy Berhad as it has higher equity ratio. Therefore, this indicates that Sunway is not rely too much on debt to finance its business. That's all from me. Thank you.
Assalamualaikum warahmatullahi wabarakatuh. My name is Nurul Fatma Aina binti Fauzi and my ID number is 2021124503. And today I will present about profitability ratio for Sunway Berhad and Sapura Energy Company.
Before I start my presentation, I will give a simple definition about profitability ratio. Profitability ratio used to assess a business ability to generate earnings relative to its revenue, operating costs, balance sheet asset, or shareholder equity over time, using data from specific point in time. Profitability ratio tell us how good a company is making money. And we have three types of profitability ratio, which are gross profit margin, net profit margin, and return on asset. For gross profit margin, it helps to assess the operational profitability of a business. The higher gross profit margin is better because it shows a company did well in managing its cost of sale. To calculate gross profit margin, we need to divide gross profit by net sales. Next, we move to net profit margin. For net profit margin, it indicates how much net income of a company makes with total asset achieved. A higher net profit margin means that the company is more efficient and effective in converting sales into actual profit. Net profit margin is calculated as net profit divided by sales. And the last one is return on asset. Return on asset help to determine how efficiently company uses its asset. For return on asset, the higher return on asset is better for the company. So, as you can see here, we have table and graph to show the profitability ratio of Sunway Berhad and Sapura Energy starting from 2016 until 2020. So, overall for gross profit margin, Sunway Berhad has a higher gross profit margin rather than Sapura Energy. Therefore, this shows that Sunway is more efficient in making a profit from its sales. For net profit margin, Sunway Berhad has a higher percentage of net profit margin rather than Sapura Energy. Therefore, this shows that Sunway Berhad is more efficient at converting sales into actual profit and good at cost control. The last one is return on asset. Sunway Berhad has a higher ratio of return on asset rather than Sapura Energy. Thus, it represents that it's more productive in using its asset to generate profit.
Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Aizat and today I want to present about horizontal analysis. So what is meant by horizontal analysis? Horizontal analysis is used in financial statement analysis to compare historical data such as ratios or line items over a number of accounting periods. Horizontal analysis can either use absolute comparisons or percentage comparisons, where the number in each succeeding period are expressed as a percentage of the amount in the baseline year, with the baseline amount being listed as 100%. This is also known as base year analysis. So for this assignment, I have decided company sale for 5 years, which is start from 2016 to 2020. The first is profitability. It consists of three ratios. For the first one is return on asset. The term of return on asset refers to a financial ratio that indicates how profitable a company is in relation to its total assets. Corporate management, analysts and investors can use ROA to determine how efficiently a company uses its assets to generate a profit. The metric is commonly expressed as a percentage by using company net income and its average asset. From the graph bar, we can see Sapura Energy return on asset in 2016 is 0.22, in 2017 5.563, in 2018 0.83, in 2019 6.181, in 2020 0.20. Meanwhile, in Sunway Berhad return on asset in 2016 0.31, in 2017 0.37, in 2018 0.31, in 2019 0.33, and lastly in 2020 0.17. To conclude, a higher return on asset means a company is more efficient and productive at managing its balance sheet to generate profits, while a lower return on asset indicates there is a room for improvement. Second ratio is return on equity. Return on equity is a measure of financial performance calculated by dividing net income by shareholders' equity. Return on equity for Sapura Energy in 2016 is 0.65, in 2017 0.16, in 2018 2.65, in 2019 0.15, and lastly in 2020 4.97. Meanwhile, in Syed Amwil Berhad, return on equity in 2016 is 1.48, in 2017 0.82, in 2018 3.48, in 2019 0.80, and lastly in 2020 4.97. To conclude, the higher the return on equity, the more efficient a company's management is at generating income and growth from its equity financing. Third ratio is net profit margin. So net profit margin, or simply net margin, measures how much net income or profit is generated as a percentage of revenue. It is the ratio of net profits to revenue for a company or business segment. Net profit margin is typically expressed as a percentage but can also be represented in decimal form. So for the Samwil Berhad net profit margin, in 2016 0.78, in 2017 0.193, in 2018 0.15, in 2019 0.183, and in 2020 0.94. Meanwhile, Sapura Energy net profit margin in 2016 is negative 0.13, in 2017 0.129, in 2018 negative 1.431, in 2019 negative 0.447, and lastly in 2020 0.582. The next is to measure liquidity. So for the first ratio is current ratio. Current ratio is to measure a company's ability to pay short-term obligations or those due within 1 year. It tells investors and analysts how a company can maximize the current assets on its balance sheets to satisfy its current debt and others payables. Current ratio for Sapura Energy in 2016 is 1.043, in 2017 0.997, in 2018 1.021, in 2019 1.349, in 2020 0.629. Meanwhile, Samwil Berhad current ratio in 2016 is 1.198, in 2017 1.14, in 2018 1.008, in 2019 1.026, and lastly in 2020 0.888. The second ratio of liquidity is quick ratio. Quick ratio is an indicator of a company's short-term liquidity position and measures a company's ability to meet its short-term obligations with its most liquid assets. Since it indicates the company's ability to instantly use its near cash assets to pay down its current liabilities, it is also called the acid test ratio. An acid test is a slang term for a quick test designed to produce instant results. For Sapura Energy, quick ratio in 2016 is 1.043, in 2017 0.997, in 2018 1.021, in 2019 1.349, and 2020 0.629. Meanwhile, in Samwil Berhad, quick ratio in 2016 is 1.198, in 2017 1.14, in 2018 1.005, in 2019 1.026, and lastly in 2020 0.888.
Assalamualaikum warahmatullahi wabarakatuh. My name is FIN534, and now I will continue the presentation on the horizontal analysis. Ratio under leverage. Okay, the first one is long-term debt to equity. A leverage ratio called the long-term debt to equity ratio compares a company's total long-term debt to its shareholders' equity. This ratio's objective is to ascertain how much debt the organization is taking on. A greater ratio indicates that the business is borrowing more money. Okay, now we compare from the year 2016 until 2020. For the Sapura Energy, the long-term debt to equity ratio is 1.33 in year 2016, and then it drops to 1.158 in year 2017, and then after that it rises up to 1.555 in year 2018, and then it drops back to 0.803 in year 2019, and then it drops a little bit to 0.775 in year 2020. As for the Sunway Berhad, the ratio is 0.342 in year 2016, and then it rises up until 0.427 in year 2017, and then it drops back to 0.299 in year 2018, and then it drops back in year 2019, which is 0.242, and then it rises up to 0.269 in year 2020. Next, total debt to asset. Total debt to asset is a leverage ratio that indicates how much debt a firm has overall in comparison to its assets. Analysts can compare the leverage of one firm to that of another companies in the same industry using this statistic. This data may reveal a company's level of financial stability. The degree of debt and financial risk increases as the ratio rises. Okay, for the Sapura Energy, the ratio is 0.665 in year 2016, and then it drops a little bit to 0.651 in year 2017, and then it rises up to 0.685 in 2018, and then it rises up furthermore to 0.866 in year 2019, and then it drops to 0.596 in year 2020. As for the Sunway Berhad, the ratio is 0.602 in year 2016, and then it rises up a little bit to 0.612 in year 2017, and then it drops back to 0.597 in year 2018, and then it drops a little bit to 0.595 in year 2019, and then it drops further down to 0.269 in year 2020. So now we move on to the activity ratio. The first one is total asset turnover. The ratio of total sales or revenue to average assets is known as asset turnover. Investors benefit from having a better understanding of how efficiently businesses use their assets to create revenue. A larger ratio is preferable since it shows that assets are being used more effectively. A lower ratio, on the other hand, shows that the company is not utilizing its resources as effectively. Yes, so now we look on the chart. In year 2016, for the Sapura Energy, the ratio is 0.209, and then it drops to the 0.159 in year 2017, and then it rises up a little bit to 0.164 in year 2018, and then it drops back to 0.129 in year 2019, and then it rises up furthermore to 0.305 in year 2020. As for the Sunway Berhad, the total assets turnover is 0.163 in year 2016, and then it rises to 0.176 in year 2017, and then it rises only a little bit in year 2018, and then it drops back to 0.131 in year 2019, and then in year 2020 the value of the total assets turnover is increases gradually to 0.548. So the second one is fixed asset turnover. An efficiency ratio called fixed asset turnover, or known as FAT, shows how effectively or efficiently a company uses fixed assets to produce revenues. This ratio, determined over a yearly period, divides net sales by net fixed assets. A greater ratio is preferable as it shows a more effective utilization of resources. In contrast, a smaller ratio shows that the business is not utilizing its resources as effectively. This might be the result of inadequate collecting techniques, insufficient inventory management, or excess manufacturing capacity. So now we compare for the Sunway Berhad. Okay, for the Sunway Berhad, as you can see, in 2016 the value is negative 10.95. In 2017 the value is negative 11.85, and then in 2018 the value is negative 11.58. In 2019 the negative is negative 8.69, and in year 2020 the value is negative 6.6. As for the Sapura Energy, the value is 3.375 in 2016, and then it rise up to 4.707 in the year 2017, and then it rise a little bit on year 2018, and in year 2019 the value of the FAT increased until 13.319, and then in year 2020 it drops back to 8.753. So next we move on to the earnings per share. The profit of a corporation is divided by the number of outstanding shares of its common stock to arrive at earnings per share, or known as the EPS. The resultant figure is used to gauge a company's profitability. The greater the company's earnings per share, the more profitable it is. So based on the graph, we can see that in 2018 the Sapura Energy EPS is negative 0.42. So this is the lowest for the Sapura Energy in a range in the year 2016 until 2020. Okay. So in 2016 the EPS of the Sapura Energy is 0.133, and then it drops in year 2017, and then it drops even more in year 2018, and then it rise to 0.034 in year 2019 and held constant until year 2020. As for the Sunway Berhad, the EPS of the Sunway Berhad is 0.125 in year 2016, and then it rise a little bit in year 2017, and in year 2018 it rise a little bit, which is 0.133. In 2019 the EPS is rise to 0.157, and the last one in year 2020 it drops back to 0.073.
So next I will present about vertical analysis. So what is meant by vertical analysis? Vertical analysis is a method of a financial statement analysis in which each line item is listed as a percentage of a base figure within the statement. Thus, line items on an income statement can be stated as a percentage of gross sales, while line items on a balance sheet can be stated as a percentage of total assets or liabilities. And vertical analysis of a cash flow statement shows each cash inflow or outflow as a percentage of the total cash inflows. It also makes it much easier to compare the financial statement of one company to another. So for vertical analysis consists two elements, which is balance sheet and income statement. So for the balance sheet refers to a financial statement that reports a company assets, liabilities and shareholder equity at a specific point in time. Balance sheets provide the basis for computing rates of return for investors and evaluating a company's capital structure. In short, the balance sheet is a financial statement that provides a snapshot of what a company owns and owes, as well as the amount invested by shareholders. Balance sheets can be used with other important financial statements to conduct fundamental analysis or calculate financial ratios. Meanwhile, an income statement is one of the three important financial statements used for reporting a company's financial performance over a specific accounting period, with the two other key statements being the balance sheet and the statement of cash flows, also known as the profit and loss statement or the statement of revenue and expense. The income statement primarily focuses on the company's revenue and expenses during a particular period. This graph bar shows three elements in Sapura Energy Sdn Bhd balance sheet, which are total current asset, total current liabilities and total long-term debt. As you can see here, for total current asset, the higher percentage is from 2018 and remain constantly for 2 years, which are in 2019 and 2020. Meanwhile, in total current liabilities, it shows decreases in 2016 to 2017 and increases in 4 years ahead for 2017 till 2020. For total long-term debt, in 2016 to 2017 it shows increases. Meanwhile, in 2017 to 2019 it shows decreases and remain constantly in 2019 to 2020. So next is the graph bar for the Sunway Berhad balance sheet. So for the Sunway Berhad balance sheet, for total current asset, the higher percentage is from 2016 and it decreases from 2016 to the 2018 and increases again at 2018 to 2019 and it decreases again in 2020. So for the total current liabilities in balance sheet of Sunway Berhad in 2016 and 2017, it should decrease. Meanwhile, in 2017 to 2019, it should increase for the 3 years and decrease again in 2020. So next element is total long-term debt. So total long-term debt in 2016 to 2017, it should increases. Meanwhile, in 2017 to 2019, it should decrease for the 3 years and it increase again in 2020. So next is for Sapura Energy Sdn Bhd income statement. It shows three elements, which are total revenue, total operating income and net income. So for the total revenue of Sapura Energy Sdn Bhd, it remains constantly for the 5 years. Meanwhile, for total operating income, it shows decreases in 2016 to 2017 and increases for the 4 years from 2017 to 2020. Meanwhile, for the net income of Sapura Energy Sdn Bhd, it shows that Sapura income decreases to negative value. So next is income statement for Sunway Berhad. So Sunway Berhad also have three elements, which are total revenue, total operating income and net income. So for the total revenue, it remains constantly for the 5 years. Meanwhile, for the total operating income, it shows increases for the 3 years in 2016 to 2018 and decreases from 2018 to 2019 and increase again from 2019 to 2020. So for the net income for Sunway Berhad, it shows that Sunway Berhad income increased positively.
In conclusion, based on our analysis, we choose Sunway Berhad company because this company is perform better than Sapura Energy and this company is really worth to invest.